because everybody wants the one ring, right? Everybody's trying to figure out how do we either get the one ring for ourselves or get out from underneath the power of the one ring. And I think gold is seen as one way to potentially do that. And that, it kind of goes back to what we talked way at the beginning of this conversation, was that the fact that one country has the ability to print their currency for the most needed things is what this is all about, right? One country has it, the other countries don't like it. One country has enforced their will on the rest of the world for a long time. Many of these other countries no longer want to go down that route. So everybody is trying to figure out, how do we get out from underneath it? And the US is trying to figure out, how do we maintain it? And that's why you see all these frictions in the middle. And that's what makes this such a fascinating time.
In the common tongue, it says, one ring to rule them all. One ring to find them. One ring to bring them all. And in the darkness, find them.
Hey everybody, welcome back to Milkshakes Markets Madness. My name is John Kutsmeda. This is Brent Johnson. Every week we come to you to talk about the financial markets, the madness that is constantly following the financial markets. And if you're unfamiliar with Brent's dollar milkshake theory, which talks about the role the dollar plays in the global financial system, well, that's the milkshakes part of our name. You can go to the Start Here playlist at the top of our YouTube channel to learn all about what the dollar milkshake theory is saying. But Brent, are we seeing the end of the dollar milkshake theory, or are we seeing the beginning of it proving itself out? What would you say this week has told you so far?
Well, what's funny is I had, so this week, the dollar had one of its better weeks in a while, and gold had a great week. And I've always said, since the first time I ever mentioned this whole silly milkshake theory that's kind of taken on a life of its own, one of the core concepts was that we will get to a place where dollars and gold rise together. And so it's been kind of funny, over the last several years, I've said that, that's what's going to happen. Gold and dollars, we will get to a time where gold and dollars rise together. And so this week, when they were rising together, I had a lot of people saying, people have been now trying to explain, why are dollars and gold rising together? This is so weird. And there's been several people on social media or send me emails saying, hey, this is it. This is what you've been talking about. So it's been kind of funny in the last couple of weeks to see this playing out, that people are recognizing it. And this is what I'd say is that, because what they would also say, this is what Brent said would happen in the end game. And it's true. I do think that is what, when we really get to the end game of this, you're going to see the dollar much higher and gold much higher, even higher than they are now. But I've always said this is not going to happen overnight. This is going to take many years to ultimately play out. And so while I think we're kind of in one of these time periods right now where things are trending the way I've said they will, I've also said there's going to be terrifying drawdowns along the way. And I think we're probably getting to a point where they're both a little high. It's very possible that, gold will pull back. It's at some point dollar will pull back. And so I kind of feel like over the next 3, 4, 5 years, we will make higher highs and higher lows. But I don't expect necessarily for this stuff to just continue on a straight line the way it is. Markets just don't work that way. So I think when you ultimately get into the ultimate end game, final chapter of the milkshake, I think we're going to see the dollar back at its all-time high and gold much higher than it is now. But I think we're seeing foreshadow of the end game. I think what we're seeing now is kind of waking people up to the possibilities that, hey, I think for a long time people have said, things aren't quite right. This is not going to end greatly. Things are going to go bad. And I think a lot of people who have maybe been on the fringe of that belief are starting to say, you know what, maybe that is right. Maybe that is where things are headed.
Well, Bitcoin is down 15% this week. So the argument that it's digital gold, and I'm not saying it isn't, but it'll be fun to see how the week kicks off, what gold, silver, precious metals do. And if Bitcoin struggles to kind of regain its footing, some would argue it's more of a liquidity play. Now, you're talking about a potential endgame scenario. You've always been very modest about you're using the dollar milkshake theory to not necessarily predict the future, but to give yourself an investment framework. Now, you're saying this this resembles potentially what the end game would look like, but nowhere near as dramatic. Is there a reason for you when you look at what's going on in price action, gold, silver, et cetera? Certainly the narratives that are flowing around all of this, including what Bitcoin has been doing the last 6 to 12 months. Is there a reason? Is it just because you feel like it's too early in the whole process? Is there something else that you're seeing that makes you feel like this is really just a precursor, not something everyone should be getting up in arms about?
Well, I think there's a couple things. One is I don't think it's nearly severe enough to be the quote unquote end game yet. I mean, there's a little bit of fear out there and there's a little bit of pain, but we're not in a huge crisis right now. This isn't like 2008. This isn't like 2020. Now, maybe we'll come in on Monday or Tuesday morning and World War III will have started and, my opinion will have changed over the next 48 hours. But as of right now, there's concern, there's angst, but there's not a crisis per se right now. So that's part of what tells me we're not in the end game. The other thing is, there's a lot of people who think that the central banks and the Fed in particular are out of bullets and that there's nothing left that they can do. And I think that is nonsense. I think there's lots of things that central banks can do. I think there's lots of things that governments can do. I think there's lots of programs that they can put in place, whether it's regulatory or from monetary policy perspective or from a social perspective or just from an outright legal perspective. I think there's a lot of things that can be done to kind of extend this game. And so all the people who think that we're coming up on this imminent, end of the current monetary system, I understand why they're saying it. I just think they're wrong. I don't think it's imminent. That doesn't mean that you shouldn't start preparing. It doesn't mean that you shouldn't be prepared for it. But I just think this is going to take much longer to play out than you think. And it's kind of like a movie, If somebody starts out at point A and just moves at a very steady line up and to the right for the next 2 hours, it's pretty boring, right? What makes it exciting is, the hero gets ahead and then he gets knocked down and he falls in a hole and then he spends the next hour kind of pulling himself out of that hole, only have to fight another big battle again. And if the stars align, then he ends up winning, right? Now that's kind of a typical storyline of a movie, but it's kind of like real life too. Like nothing just, if everything just ended tomorrow, that'd be kind of boring. And I just don't think that's good. I don't think that's the way it's going to be. I think the U.S. will probably do some things that work out it's in a favor, and then the rest of the world will do some things that knock the U.S. back a little bit and work out in their favor. And this will have a lot of back and forth. Some battles will be won, some battles will be lost. But I just don't think that this is something that ends tomorrow. I think there's a lot more things that have to happen before we get to a true end game. And 4 or 5 years ago, I said it would take 4 or 5 years, and now we're 4 or 5 years in the future, and I think it could easily be another 4 or 5 years.
You talk about the hero's journey. It's interesting you bring that up. Over the years, I've always jumped in and out of podcasts about Rome. I'm now reading The Storm Before the Storm, and it's
Great
literally
book.
just an endless barrage of like short punctuated hero's journeys. So every time I'm working through a chapter, I'm just like constantly thinking of how much it relates to everything that we talk about every week and everything that the U.S. as the global power, which everyone thinks is going to die a similar death as the current empire, how much it does really relate. But again, thinking about this what Rome went through hundreds and hundreds of years. So it'll be an interesting thing to see when and if you and I are even alive when the end game happens.
That's a great book to reference. I'm glad you brought it up. I've actually mentioned this at presentations on podcasts and at conferences that I've been to before. If nobody's ever read this book, The Storm Before the Storm, written by a guy named Mike Duncan, you should absolutely read it. And I will often use this slide to show. This basically takes place from the year 110 BC to like 60 BC. So it's about a 50 or 60 year period. And the number of parallels between what's going on in Rome then and what's going on in the United States now is absolutely uncanny. Every issue that we are having in the US now, you can find it in this book, whether it's immigration, whether it's inequality, whether it's too many wars being fought on the edge of the empire, whether it's social strife between the political parties, families dominating a certain set of politics for a number of years. It's unbelievable the parallels. And then I will show this and people will say, see, the United States is Rome. They're destined to fall. And then I say, yes, you're absolutely right. But Rome didn't fall for another 400 years after the end of this book. Now, I'm not saying the U.S. is going to last for another 400 years before they get their comeuppance, so to speak. I'm just saying, like, these things take a long time to play out, and there's many starts and there's many stops. So anyway, that's I'm glad you referenced that, because that's a great book, and all of our listeners should absolutely read that book.
Yeah, and the uncanny level of corruption too is something that makes me smirk. It's just human beings just never change. We are who we are, and the more we learn to accept that, I think the better off we all will be. And one of the things that we are seeing in terms of the human behavior is the irrationality. Before we get into that, which is definitely on display, even in something like the gold and precious metals markets, while we're on this government topic, or at least on the thread somewhat, I'd like you to weigh in. They kind of all work together. I mean, first of all, last week we had the CPI data, and every month we joke that, the inflation data, the report coming up is the most important CPI ever. And it's really the driving force behind markets trying to predict what the Fed is going to do. Markets move on expectations that are trying to navigate where that goalpost is going to be before the Fed says or does anything. So with that in mind, I'd like to get your thoughts on CPI. Also like to get your thoughts on how you see ongoing government spending, especially if conflicts continue all over the world. In addition to that, with the latest CPI report, give us some thoughts on where you see the potential of Fed rate policy going this year, hikes, pauses, cuts, and then maybe talk about, I don't think it's necessarily the case for the US yet, which is what you always talk about. Things will happen outside of the US before they happen here. But, maybe share a little bit about currencies and bonds and how the governments decide which one they're going to save.
Okay, sure. So pre-CPI this week, I felt like CPI would come in with at least meeting expectations and would likely beat expectations. I did not think it would come in lower than expectations, and probably don't have time to go through why all of that is. I just happen to think that inflation will remain stickier longer than the market seems to expect. Now, I'm going to put one little caveat on this, is that if I think inflation, but I would also say inflation has been pretty steady for the last 9 months, 12 months. It's kind of gone sideways, but it's not, and it has come down a lot from where it was a year ago, but it's not coming down at the same rate of when it was coming down. And now it's kind of staying pretty flat. And again, there is still inflation. It's just disinflation, right? And so that has an enormous impact on markets, because that is what drives rate policy. Now, I have the opinion that it was going to come in hot to slightly hot. And so pre-CPI, I think we talked last week, John, that we were in a place where we thought volatility could rise a little bit, that bonds had already kind of come off over the last month, but that equity and currencies had kind of started to come off over the last month, but equities had not yet reacted, but they just started to react last week. And we said this week we could see a continuation of that, and we did. So, pre-CPI, one of the things that I did is we bought some puts on the 10-year, and we bought some puts and we shorted the Toronto Stock Exchange. And I'm going to tell you why. And again, this is not with my entire portfolio. Again, for people who haven't listened before, I got to say, we have an asset allocation which rarely changes. But we do have an option overlay or tactical trading portion of the portfolio that we will either hedge exposure or increase exposure by using this one smaller part of the portfolio. We're not selling all our stocks and then buying all our stocks, and we're not all in on bonds and then all out. So when I'm talking about a trade, it's a trade. It doesn't mean I'm all in on something, but as a way to hedge equity exposure that we've had and have had for years, we will occasionally buy puts. And this time what we did is we bought puts. Instead of doing it on the US stock market, we decided to do it on Canada. Now, why would we do that? Part of the reason we did it is because the Bank of Canada had a meeting where they came out and they're certainly not going to be raising rates anytime soon, and they may have to cut before the Fed. And because I thought the Fed was going to come in hot, I thought that would make the dollar go up versus the Canadian dollar. So not only do you get the effect of the currency going down, if the stock market in the US falls down, the Canadian stock market is highly correlated to it. It's probably going to fall down too. And it's been going up for a pretty long time. So from a technical perspective, it looked like if it sold off, it would break a technical level. And, we were fortunate. That's exactly what happened. So that played out pretty well. The other thing that I mentioned is, we bought some puts on the 10-year. Part of the reason we bought some puts on the 10-year, and this may be surprising to people because a lot of people say, well, Brent, you're the US dollar bull. Why wouldn't you? I thought you thought bonds were going higher. That's not necessarily the case. Where I would be bullish bonds is if we got into some kind of a crisis or a liquidity crisis where everybody is rushing to safety. I could, in that environment, see a very strong downward move in yields while people rush to the traditional safe haven, which is the U.S. Treasury. But without that kind of crisis, I kind of expect rates to kind of stay higher for longer, go higher for longer, partly because of this inflation remaining sticky. And the other thing is that as yields stay higher, that is what gives the dollar strength. If you get paid more to sit in short-term treasuries than you do to get paid and sit in short-term Canadian dollars or short-term Canadian treasuries or Italian treasuries or Australian treasuries or British treasuries, that's what pulls capital into the US dollar. And so that's what gives it strength. And so that's part of why the dollar has been stronger over the last couple of months, is because it was weaker at the beginning of the year based on all these rate cut expectations. As those rate cut expectations have disappeared and the yields on the US Treasury have stayed steady and started to rise, that pulls capital into the US. It pushes the dollar higher versus other currencies. And so, again, if we referenced this last week on last week's episode, there's a presentation, I think we put the link in last week's episode, that I gave when I first started talking about my framework. And a key part of the framework was that the 40-year bond bull market would break. Bond prices would fall, yields would rise, and as the yields rise, that would pull capital into the US and the US dollar. Okay, so that's kind of where I see inflation. And I think that probably continues for the rest of the year. I don't know if, I kind of feel like we'll get a cut just because the Fed has telegraphed it so much. And I think they kind of want to cut just because they said they're going to. If they don't cut at all now, then I think that kind of makes them look silly after forecasting a bunch of cuts. I don't think they should cut based on the data, but I think that they probably will. Anyway, so I'm kind of rambling here, but I want to get back to your question. So the way that impacts markets and the way that this can potentially impact from a government perspective. So I think you asked the government perspective, are they going to continue, and what will, when the government has to choose between saving the bond market and saving the currency. So I expect the US government to keep spending money like it's just going out of style. I don't think that the budget deficit is going to drop. I think it'll probably get much bigger than even the most wild forecasters say. And while that in the very, very long term will be bad for the US, I think it will be bad for the rest of the world first. And I know people are getting sick of hearing me say that, but that's what I believe. And so far, that's what's playing out. And here's the reason why, is because if a government just spends and spends and spends, eventually they will have to choose. And if they can't get anybody else to buy their debt, then they have to choose between saving the currency and saving the bond market. And of course, they always end up saving the bond market and sacrificing the currency. The reason the US dollar or the US government can get away with this longer than any other country, now, it doesn't mean they can get away with it forever. But the reason they can get away with it longer than any other country is because they have the global reserve currency, and there's an incredible amount of demand for US dollars outside the United States in the eurodollar market. So in other words, other countries don't have their external market like the US has the eurodollar market. So any currency that they print or loan into existence or make, it stays in their domestic economy. It makes their currency lose value, and then they have higher inflationary pressures. The reason the US has been able to kind of quote unquote print all this money without having total crazy hyperinflation, runaway inflation, is because they're able to export that inflation via demand in the eurodollar market. And so I think the US can get away with running this crazy budget deficit to much bigger numbers than people believe and for much longer than people believe before they have to choose between, do we save the currency or do we save the bond market? But as the US spends this money, it pushes pressure on yields higher because people will say, hey, they're borrowing all this money. We want to get paid more for buying these longer term bonds, and inflationary pressures are picking up or staying high. So we want to get a higher yield. So yeah, we'll buy the treasuries, but we want there to be a higher yield. That crowds out the rest of the dollar's availability for the rest of the world. This is the fiscal dominance you'll hear about. The government is spending the money and they're borrowing all this money. Well, so the money in the system has to go to finance the treasury. That keeps the money from being put to use in other more profitable or more efficient or more productive means. And so that's the crowding out by a fiscal dominance that you hear about. And so people say that will be a bad thing for the US. Okay, yes, it will be a bad thing for the US. But remember, there's so much demand for dollars outside the United States. If you are going to crowd out activity in the US economic market or in the US domestic market, you are also going to crowd out dollar availability outside the US domestic market. You can't crowd out activity inside the US market and make it plentiful outside the US market. It just doesn't work that way. Think of the Cantillon effect, right? Whoever's closest to the money gets the money first. So you're not going to have a situation where the people outside the US who need US dollar funding are going to get it while the people in Texas or California or Minnesota don't get it. And so, yeah, there will be a crowding out effect of this fiscal dominance in the United States, but it will affect the whole world. And as they are having trouble getting US dollar financing in the eurodollar market, that will cause problems on the periphery before it causes problems in the core. So that was a very long way of answering your question. I hope that makes sense.
Look, it's not easy when you get thrown a 3-part question that actually has some granularity to it. So I'm impressed.
I hope it makes sense.
You kept it all together, even if it was just barely Velcroed there. But no, that was great. I want to add one thing to it. Talking about fiscal dominance. So this is interesting. Let's get into it just a tiny bit more. I had the pleasure of having a conversation with someone about the dollar milkshake the other day at a bar here in Sydney. And I enjoyed using your example of, I pointed them to a high rise and I said, there's no way the foundation or the basement of that high rise can, be destroyed and the penthouse survive that crisis. And so when you're talking about the stuff that goes on in the periphery and around the world, the US is the foundation. It's the global reserve currency. So whatever, the US sneezes or catches a cold, or the US sneezes and the rest of the world catches a cold. Those types of analogies are kind of what you're articulating here. But in the case of the fiscal dominance, one of the things that, whether the term fiscal dominance is being used or not, one of the things that is being talked about is this explosion in interest payments to the government deficit. So would you say, given this, your point of view here, this is we talked about, the storm before the storm, making the Rome analogies. The timeline here is much, much longer, but does this increase in interest cost concern you more outside the US than inside the US, even though it's obviously a US problem?
Yes. And so this, absolutely. And so this is why I think I've always said it. I think I've always said it correctly. I hope I've always said it correctly, but I'll repeat it again. I am not saying this is not a problem for the U.S. If a bomb goes off in the basement of the building and it damages the foundation, that is bad for the basement and that's bad for the foundation. My point is that it's not good for the penthouse, right? To the analogy that you just used. And so the idea that you're going to have a crisis and that whether it starts in the penthouse or whether it starts in the basement, it doesn't really matter. You don't want to be in the penthouse when the foundation buckles, right? And I could make the argument, and I have made the argument, that a crack in the foundation is going to cause all kinds of problems for the penthouse, and the penthouse is going to come crashing down. While the people, not only that, but the people in the foundation, in the floor, they can get out quicker. It's easier, right? They can exit quicker. The people in the penthouse are kind of screwed, and so I think that's kind of how this plays out. I'm not smarted enough to know whether the crisis, whenever the crisis happens, whether it's tomorrow or 5 years from now, I don't know where it'll start. But I know how the system is designed, and I know I would much rather be in the basement or in the first or second floor when it happens than I would be at one of the higher floors.
Great. So look, let's talk about some of the things that have been going on in precious metals, because it does evolve around the idea that a crisis is coming. The market seems to be, or at least investors are predicting that the foundation, the U.S., the global financial system is ready to be rewritten. And so some of the rhetoric around the recent price action has gotten a little emotional or irrational, let's say. I know you've had some interesting conversations with people throughout your entire career in the gold space, but even just recently this week on Twitter and in person, you've had some interesting dinner meetings. So I'd like to tee this up by going through something that was posted on Twitter. And I thought at least the engagement around it was relatively rational and contained. But I thought first, let's start reading through some of the comments here, because I think it's good to point out how this conversation developed. It was relatively well-tempered, and then give you an opportunity to talk about not only this thread on Twitter, but some of the conversations you've had in person recently. So you had made a comment here that, and this is kind of, I think, not specific to gold, but I think it'll flow nicely into a conversation about gold. You said commodities being transacted in various currencies is not the same thing as commodities being priced in various currencies. So I'll say that again: commodities being transacted in various currencies is not the same thing as commodities being priced in various currencies. George Franklin asked that you elaborate on the podcast about this. So here we are. We're going to talk about that. Brent Donnelly commented, imagine if you got paid for your oil in euros or in Chinese yuan. It's literally impossible to convert those currencies to dollars. So it's a complete rewrite of the global monetary system, right? He asks to you. You reply, so many so badly want dollar hegemony to end that they will believe whatever new theory is rolled out to support this narrative, no matter how arcane and convoluted it is. Now, everyone bear with me. You too, Brent. I want to go through a few more of these because, again, I think some of the comments here will make this conversation, or at least let you go on a rant and cover all of these bits and pieces. Someone else replied, the problem with this logic is that you can just as easily say that oil isn't priced in US dollars. It's priced in gold, just transacted in US dollars. You replied, yes, you could say that. You'd be wrong, but you could say that. The fact that it is wrong and some countries want to make it so it isn't wrong is largely what this conversation is all about. And I would emphasize the conversation is literally the conversation we have here every week. This is our 110th episode. We beat this to death. And then yet in the comments, we get people who just don't want to ponder some of these possibilities and really look at the world as it is versus how they want it to be. We had another comment from a handle Super Mario 289. Gold, oil, silver, and other commodities are priced in the Chinese yuan in the Shanghai Futures Exchange. You replied, that's internal China trading consumption. Just like every country, dollars are needed to get them from outside China into China in the first place. So I'll leave it there. Let me hear your thoughts on this online conversation, and then feel free to enlighten everybody to some of the conversations you've had offline and in person recently.
Yeah, well, first thing I'll say regarding Brent Donnelly's tweet, he said he referenced euros and yuan. I'm pretty sure he meant rubles and yuan, but I'm not 100% sure on that. But the reason I think that is he says you can't convert them to you can't freely convert them to other currencies, and that's true. They're not really freely convertible currencies. You got to go through their central bank, or it's more convoluted, or to get them. It's not like just trading the yen and the dollar. The other thing I'd say is the point I'm trying to make is you can sell something denominated in yuan. That's not the same thing as pricing it in yuan. And what I mean by that is if somebody is buying gold, if you are in China and you are buying gold from the COMEX, because there's this, well, this isn't a conspiracy. This is true. Gold is flowing from the West and it's getting imported into China. So gold is flowing from West to East. And there's this narrative out there that China now has the ability to buy gold in yuan. They're transacting in yuan. That may be true, but it's not priced in yuan. And what I mean by that is China is not sending yuan to the COMEX or the LBMA or the ETFs in the West, and then the West is shipping gold into China. And in the cases where they are transacting using yuan, it's being priced in dollars. So they may be using yuan, but it's based on a US dollar yuan equivalent, or it's based on a US dollar equivalent number of yuan to get it in. And when whoever's selling it gets the yuan, they immediately turn it back into dollars. And the yuan goes back to the China, because you can't use the yuan outside China. So this idea that just because transactions take place in yuan does not mean that commodities now trade and priced in specifically yuan, and it doesn't mean that China now has the ability to print however much yuan they want and go buy commodities with it, with no counter effects. And so that is the difference. Again, if I fly to Buenos Aires tonight and I go buy an apartment tomorrow, I can pay for it in pesos, but the number of pesos I use to buy that apartment will be based on the peso dollar exchange rate, and it will be priced in dollars. I may pay for it in pesos, but it's going to be a US dollar equivalent number of pesos, so that person who gets it can immediately sell those pesos and get the exact same number of US dollars that they are pricing it in. That's the difference between something being priced in a currency and something being transacted in a currency. It's kind of like when you go to Chuck E. Cheese. You walk in, you convert your dollars to tokens, and then you can go buy the teddy bear with a token. But it's immediately getting converted right back to dollars. So it's not like Chuck E. Cheese. It's not like you can take that Chuck E. Cheese token, walk out the Chuck E. Cheese door, go over to Toys R Us, and buy a teddy bear with that token. The only place you can use that token is inside Chuck E. Cheese. Inside the store, you can use it, but outside the store, you can't. And to get the bears, the bears that Chuck E. Cheese is selling inside Chuck E. Cheese, to get them into the store, Chuck E. Cheese had to use dollars. That's the same thing with the Shanghai Gold Exchange. If somebody has a gold store in China, and they buy and sell in yuan, that's fine. They can do that. But to get the gold imported into China, they had to use dollars. Again, they're not using yuan to buy gold from Switzerland. And if they are using yuan to buy gold from Switzerland, it's priced in US dollars, and they have to send enough yuan to convert to that US dollar price. So that is the difference between, and that's an important difference because there's only one country that can actually print or can actually transact and price in a currency that they just freely print, and that's the United States. And that is the power of the GRC. And that is the power of the One Ring. It is so powerful and it is so alluring, nobody will ever give it up. And this is why when people say the GRC is no longer helps the US, it's a hindrance to the US. You know, from an economic perspective, they'd be better if they give it away. Okay. I mean, maybe from a purely economic standpoint, you're correct. But from a power standpoint, you are totally wrong. And the US will never, ever in a million years willingly give away that power. And that is also why every other country wants to get out from under the US dollar thumb. They do not like this system that the US dollar and the US government has imposed. They all want to hold the one ring for themselves. They all want to be able to print their local currency for gold, for oil, for whatever they need. Every government wants that power. And so I'm not denying that other countries are trying to take that power away from the United States. I'm just saying they don't currently have it. And so it's important to understand this. And this will kind of lead into my thoughts on gold, because I think a lot of people, they've heard me say I'm long-term bullish on gold, but yet I'm also, whenever one of these things come up that says, you know, so-and-so is going to use this gold and they're going to use it instead of dollars and it's going to transform their economy and everything's going to be great and the US dollar is going to hyperinflate. I'm exaggerating, but I hear that type of stuff a lot. I'm not saying that those countries cannot use gold as a currency to do that. As an example, let's just use China because that one comes up all the time. Sure, China could stop using the dollar. They could start using gold. And as a result, then they could get out from underneath the Chinese or the US hegemony and outside of the US global dollar denominated system. And people put forth these theories all the time. And I argue with them. And people are saying, well, why are you saying now it'll work? It would work, but what would happen is for a year, 2 years, however, maybe, you know, there would be a period of time that would be incredibly economically bad, horrible, volatile, whatever word you want to use. It would not be a case where they just overnight start using gold. China becomes this paradise and the US falls in a hap of hyperinflation. It would be incredibly painful for China. They would have defaults. They would have, their currency would get devalued. You know, people would stop trading with them initially. Companies would go broke. But then, after all the U.S. debts were purged and after they didn't have to use the U.S. dollar anymore, then they could start rebuilding and they could only trade with countries that would trade with them and they could do it outside the dollar system. But they would have to go through an incredible amount of pain to do that. So if anybody would come to me and say, you know what, China and Russia are going to do this together. They're going to launch a currency amongst themselves. They're going to use gold. They're no longer going to use the dollar. And it's going to be a shit show there for the next 3 years, but then they're going to be fine. I'd probably say, you know what, maybe you're right. But instead, it's always like this super 3D chess move that they are secretly going to pull off overnight, and it's going to send the U.S. into a tailspin, and their economies are going to expand immediately. And it just doesn't work that way because, again, the rest of the world does not accept yuan for whatever they want. The rest of the world does not accept rubles for whatever they want. But the rest of the world does currently accept dollars, except for, you know, in limited cases, people say, well, Russia doesn't accept dollars anymore for the oil. Well, they actually do, because if you want to buy oil from Russia, you can do it in either euros or you want, or you can only, you have to do it in rubles. But how do you get the rubles? The only way you get the rubles is to buy them from Russia. Well, what does Russia want in exchange for their rubles? They want dollars and euros. So the people that say that Russia is de-dollarizing and they're no longer using the system, they're wrong, because Russia still accepts dollars and euros for their rubles. So again, it's easy to say these things. It's really, really hard to actually do them in the real world. And this is where I know a lot of, I know that this is the source of some of the frustration with me, because people just don't want to hear it. They want to hear how it's going to work. They don't want to hear why it's not. And I feel like people have been told this same story for years and years, even though it never comes true. And not many people take the time to tell them how the world really works and what what the actual real world consequences would be of a transition from this system to another system. We are not going to transition from this system to another system without incredible volatility. And it probably won't happen without a war. Now, I hate saying that, but that's the real world. And listen, if I end up being wrong, great. That would be fine. I don't have a problem with that. But I just don't think that's the way it is. And I kind of, again, for my clients, I have a fiduciary duty to explain how it really is. And as you know, part of the reason we do this show is to help those who aren't clients, who I don't have a fiduciary duty to, but who we want to help educate, who we want to help navigate this, these kind of perilous times that we're in. We want to help them understand the world as it is so that they can navigate it. And if the crisis does occur, they can kind of get through it.
Awesome. And I'm glad you paused there, because I did ask you about the in real life conversations you've had. And before we go there, I want to pick up on some of the things you shared, which was a great insight into all the things we talk about here. But I think it was very concise, straight to the point, especially with the things that have been going on and the narratives that keep, gathering some momentum, at least in the last couple of weeks. One thing is, I love the Chuck E. Cheese analogy. The whole time you're sharing that, the funny thing is, I was thinking to myself, all the cheap plastic garbage that is really the only thing you can afford. Like the amount of tokens or Chuck E. Cheese tickets you have to accumulate to even think about getting a teddy bear is absurd. And so the whole time I'm just thinking like those cheesy, like plastic spider rings and things of that nature. And then you mentioned you made the Lord of the Rings One Ring analogy. So I thought that kind of molded together pretty good. The other thing too that got me thinking, and you mentioned war, but you had talked about, I think a real big part of what you just described is the transition is going to be so difficult. And one of the things that we sometimes joke about or somewhat mock in regards to the BRICS currency conversation is that none of these, they're all jockeying for power. If you told Russia, do you want a fair, well-balanced BRICS currency, or do you want to have control and in the ruble be the reserve currency? Of course, they're going to choose to have the power. And the idea that any of these entities are going to get rid of the ability to print their own currency is certainly one of the flaws that we point out in that conversation. But in the context of the pain that a country would have to go through de-dollarizing and establishing this new mechanism, this new system, would be so immense, so intense that it's unlikely anyone's going to necessarily try to achieve that, because in many ways it'd be political suicide. And then you talked about war, and in my mind, what I was thinking about before you mentioned that is, would a country like a Russia, who's one would argue is led by a psychopath or at least some form of dictator, or a country like China, who many would argue is run by a psychopath and certainly a dictator, would they use war as a veil to cover up some of the pain as this transition is going on? And perhaps is that part of your concern why war is certainly on the table?
Absolutely. And I'll say, I think your explanation or your characterization of Z and Putin as psychopaths, I think it's totally appropriate. But I also think the characterization of Biden and Macron and all the other Western leaders, you could say they're psychopaths as well. And Trump and who's the guy, Trudeau. These guys are all psycho. Then Hillary, they're all psychopaths. So I think your characterization is correct. I just don't think it's unique to dictators. But yes, absolutely, war would absolutely be used to, again, the whole blame the foreigner for my domestic problems is a strategy as old as time. We were talking about Rome and the storm before the storm. I mean, this goes back centuries before Rome. I mean, this is the oldest strategy in the book. And so not only would I think these countries use war as a means to cover up the problems at home, but I think the U.S., if it had to, I think the U.S. would use war to maintain their place on top of global hegemony. I think they've proven that time and time again. So, again, this isn't just Russia and China will use a war to accomplish these things. The U.S. would do it as well. And again, this is real world, right? This isn't the nice, day at the fair where we're going to come up with a new currency system and we're all going to, just start transacting in, tulips tomorrow. I mean, this is the Game of Thrones. I keep throwing out these different, movie references and popular culture references, but I really do think like that's what's going on. This is a Game of Thrones. This is the game for all the marbles, and it's going to get ugly. And I hope I'm wrong.
All right, so two things I want to slide in there, and I want you to tell us about a meeting you had recently, and that is one. I think the way you describe the purpose of the show is spot on, and I'll add to that in that I think a lot of people get hurt and have gotten hurt, especially over the last 2 decades, because they've held on to ideologies that haven't worked out and haven't asked themselves the questions why. And that's really how you ended up in coming up with the dollar milkshake theory. Is you shared this view as to gold is the only true form of money, and how things should, we love that word, should play out. But sometimes just because the fairy tale sounds good, it's not how things unfold. And when you got it wrong is when you started asking questions. Why did I get it wrong? And unfortunately, I don't think enough people are asking those questions. And if you do present them with a scenario that doesn't align with their narrative, they get hostile, they get irrational. Fortunately, there are people out there who are constantly trying to learn and are open to having a rational conversation and asking why. Do you want to share a little bit about a conversation that you had that's in line with that?
Yeah, so I was really excited last week. I think it was Friday or Saturday. So about a week ago, I got an email from my friend Anton Waldman, who I think you know Anton as well, right? Lives here in Puerto Rico. Sent me an email and said, "Hey, Simon Mikhailovich is going to be here. Do you want to get together?" And I was like, "Oh, I love Simon. That would be fantastic." So Simon Mikhailovich, just a fantastic guy. He's one of my favorite people in the gold world. And he's been doing it. And part of the reason that I like Simon, and anybody who is not familiar with Simon's work should absolutely, find some of his interviews or his writings or his tweets. And part of the reason that I like Simon is there's a couple of reasons. One, he's Russian, and his family left Russia in the 70s in order to escape communism. So he knows what life is like under a communist system. And then he moved to America and he became a very successful capitalist. So he has a real life understanding of the different two types of systems and what makes one work and what one makes one not work. So his historical, real world, firsthand experience, I just find to be incredibly beneficial. The other reason I like him is he didn't start off in the gold world. He started off in traditional finance, worked on Wall Street for a number of years. I think he ran a distressed credit fund, if or something along those lines. If I'm not, so he understands balance sheets. He understands counterparty risk. And it was I think it was between, I might not get this exactly right, but you can find out from him or his work. I think it was between the dot-com boom and the real estate crisis in 2008. He realized that he needed to have a way to invest his money and some of his clients' money that didn't have counterparty risk. And he did this because he was in the credit business and he understood credit risk. And through that work, he came to gold being a solution. And then he realized that there was not a great solution out there for people who are trying to plan for a kind of once in a lifetime potential change of the system. And so that led him to the gold world. And now he has a service where he offers the ability for clients to invest in gold. And, again, I'm not going to give you all the details on his offering, but I think it's one of the better offerings out there. And so anyway, that's how I know Simon, and that's why I like Simon. But the third reason I like Simon is he's not hyperbolic. He's just the nicest, calmest, most rational person you'll ever talk to. And sometimes it's really hard to have a normal, rational, calm conversation about gold without it getting very crazy very quickly, whether it's from a conspiracy angle, whether it's from a price target angle, whether it's from a, China and Russia hold all the cards and the US doesn't have any angle. The point is we had this conversation. He's obviously a gold gold proponent, and I'm a gold proponent. Anton's a gold proponent. His daughter Zoe works with him, and she's a gold proponent. But again, nobody was like, I talked about some of the things I'm seeing from my position and my thoughts on the dollar, and they sat there and they listened. Nobody like lost their mind. I sat there and listened to what they're experiencing in the gold world, and it was great. I asked them questions of what they're seeing, and here one of the things that they're seeing is to him, it's kind of amazing because while price has ran up like 25% in 6 months or whatever it is, seeing very little to no demand from the West, from the US. All the demand is coming from Asia and China. That's kind of amazing. And you see the gold leaving the Western ETFs, and you see, but U.S. mint sales were down dramatically last year, or at least one of their lowest levels in years. And so we're not seeing the demand from the U.S. Now, my take on this is that part of the reason we're not seeing the demand in the U.S., but they are seeing it in China, is number one, yeah, they are obviously trying to figure out a way to get out from under the dollar system, but also their currencies are not the dollar. Their currencies are falling dramatically in Asia. They're falling dramatically against the dollar. I've always said that when the dollar gets into a crisis, gold will do great in dollar terms. Now, it's doing pretty good in dollar terms right now, but it's doing much better in other currencies. And so, but my point, but it was great to hear his take on this. And it was great to talk to a US gold guy and not have them say, oh my gosh, everybody in the US is rushing to buy gold. I've never seen anything like it. Premiums are blown out. Inventory's low. Like, that's typically what you hear when gold price is rising. But he, again, and the other thing that his view on gold to me is very similar to mine. Part of the reason I don't own gold in order to make a lot of money, I own gold and my clients own gold as an insurance policy against an inevitable event. The fiat system will end. It's a mathematical certainty. And then maybe it rolls over to another fiat system. Maybe it rolls over to something else. But the current system will go into crisis. It will come to an end because mathematically it has to. Now, does that have to happen next year? No. Does it have to happen in the next 10 years? No, but it probably will. And there's a lot of signs that say it might happen sooner than many people think. And I think that Simon is into gold for the same reason I am. We both recognize this. We both recognize that you need to have, if you are a fiduciary, you need to have some kind of a plan for this. But it doesn't mean you have to go on King World News every day and say that gold's going to $10,000 tomorrow and that silver is going to blow up the COMEX. Now, those things might happen, but literally you can go to these websites and they've been saying the exact same thing and been given the exact same interviews day after day for 15 years, actually 20 years, 30 years. And so Simon said to me, he said, that's not what I'm about. He said, I think that this is, a risk that has to be planned for. I think we have a way to solve it. I don't know exactly when it's going to happen, but I need to be prepared for it. And I remember sitting there at breakfast thinking, my God, it's like he split my head open and said my thoughts out loud, because that's exactly how I think about it. But yet then I'll interact with people in other venues, whether it's Gold Conference, whether it's on Twitter, whether it's on podcast or social media, and people will be saying to me, oh, Brent, you missed the move. You missed out on this run on silver. And I'm thinking, and then some people will say, well, Brent, you say you're a gold bull, but you don't act like one. You haven't called any of the breakouts. Well, the reason I haven't called any of the breakouts is there haven't been any. Now, gold has recently broken out. Will it last? Maybe. I've owned gold for years. If it does, that'll be just fine. but the miners haven't broken out. Silver hasn't broken out. And anybody who has tried to make money in the precious metals world over the last several years has not done it. They unless they were trading it. And if you're trading it, then you can, as I'll give silver as an example. Silver's been between $20 and $30 for 5 years, and it's gone to the highs, it's gone back to the lows, but it's been in this $10 range for 5 years now. The only way you made money on silver over the last 5 years is if you traded it. Well, you know what? You can make just as much money buying gold at 20 and going to 30 and selling it, or you can sell it at 30 and buy it back at 20. So again, once we get through the $30 range and we go higher, then maybe it's off to the races. But so far, the reason I haven't called the breakouts is because every time we've got to this level on silver, it's sold off. So who's right? The people that every year called for silver to break out and it didn't, or the person who didn't call for silver to break out and it didn't? Now, again, I understand that people want it to break out. I understand people want that to be the case, but it has not done it. If it gets through 30 and it goes to 33 and it comes back to 30 and then it goes to 39, I'll hold up my hand and say, yeah, it broke out. Congratulations. But if people are saying that you missed out on making money between 24 and 28 or 22 and 27, well, then I would say you missed out on not owning crypto because you could have made a lot more than that, or you missed out on owning NVIDIA because you could have made a lot. So in other words, my gold allocation is not a place to make a lot of money. My gold allocation is a way to save a lot of money and to save a way of living and to save a purchasing power of an overall portfolio. If you are in gold because you want to get rich and fly around in a private jet, that's fine. That's totally different strategy than what I'm in. That's not the reason I'm a gold bull. Now, if you are, fine, fantastic. But I think of gold much differently. And that's why I don't think of silver the same way I think of gold. I think of silver as a speculative way to make a lot of money. I think of gold as insurance of a lifestyle. And again, I'm not saying one way is better than the other. I'm just saying that's how I think about it. So it was great for me to have this breakfast with Anton and Simon, because it was one of the more fun, interesting breakfasts I've had. Again, Simon, travels all over and meets with people, big investors. So it was great to hear him. Anton travels all over the world. He owns some property in Turkey. It was interesting to hear his take on, things going on in Turkey and how they think of gold and how they think of dollars, how they think of lira. But anyway, I think if anybody's, I'm just going to give a little plug for Simon here. Anybody who's looking for a solution in gold, I think Simon tends to work with high net worth individuals. So if that's kind of your thing and or if that's kind of describes you and you're looking for a gold solution, I think Simon's got a fantastic one.
Well, look, some of the things to put a bow on what you just shared, which also was another great part of this. You must have had a double espresso this afternoon. I
do get a little fired up sometimes.
Well, this is your world, man. This is it. This is where there's like tension and disagreement, and it's around mainly around ideologies and narratives, and certainly an asset you love for different reasons, which is precious metals and gold. It's definitely the arena you like to be in. I will add to that, you mentioned the performance if you're trading of things like NVIDIA and Bitcoin. There was an interesting chart that we had shared and discussed, which is the total return of the 3-month treasury is not far off right now from the NASDAQ and the S&P. And so just getting paid to wait in this environment has been a way better trade than speculating in precious metals. There's a difference between, an insurance policy. There's a difference between, certainly when it comes to managing money and giving investment advice, which the show most certainly is not. There's a difference between risk tolerance as well. So it's very, I think, unfair for the way people approach some of these conversations when it's not a one size fit all. And more importantly than anything, duration and timeline has a big factor on that. And look, before we wrap up here, or at least wrap up this particular topic, there was one interesting comment on the gold conversation this week that I wanted to make part of our show, and perhaps this is where we can wrap things up. A gentleman by the name of Bob Elliott posted a thread talking about some of the things that are going on in gold. What I'm going to share here is not to frame his thread or his post in any way. Is just what a chart that he had posted, and the comment to that chart is what I want to highlight. So Bob had shared that Chinese demand is still the important driver. He showed a China gold ETF surging 30% since March. And then Nick Giva made a comment: in the midst of the strongest technological revolution in all of human history, and he put in parentheses, it's not even close, the Chinese decide to buy gold. It just shows you buy what you are forced to buy. If I wanted to sink China forever and the CIA asked me to come up with an economic black ops, this is exactly what I would come up with. Force them to invest in the most unproductive asset out there, which you can do nothing with but bury in a hole again. Now, this isn't necessarily the way you feel overall, but do you want to maybe punctuate this entire conversation that we've had? Because, I think one of the things that you said was really prolific is that this is war. What is happening right now between the U.S., the gold prices, this dollar hegemony? These are Game of Thrones strategies. And so do you feel like this is kind of just a unique or clever take? Do you agree with it? What are your thoughts on kind of this? China is being forced into gold and it's a horrible decision at this time. And then we can kind of wrap up this episode.
Well, so there's a couple things here. This is a good thing that you brought up, because I partly agree and I partly disagree with both of them. And so this is the way I'll frame this. Part of the reason that China is buying so much gold is not because of the dollar. It's because their currency is the Chuck E. Cheese token. So of course they want gold. Of course and that's why it's going up a lot more in yuan terms than it is in dollar terms. Because while the dollar might not be as good as gold, it's sure as hell a lot better than the Chuck E. Cheese token, right? And so China, when the average Chinese citizen wakes up in the morning, he doesn't say, holy shit, Biden's going to steal my purchasing power today because that dollar is just a horrible currency. He looks at the yuan and he's like, God, this yuan is horrible. I keep losing money in this thing. I'm going to go buy some gold. So, and, they have history with government confiscation. Again, the U.S. has history with government confiscation as well. I'm not saying they don't. But again, the average Chinese citizen is not buying gold because of the dollar. They're buying gold because of the yuan. So that's number one. Number two, I think the Chinese government is also buying gold. And I think they're buying it for two reasons. Number one, their currency is also the yuan. And they know that nobody wants their currency. And they know that in some kind of an adverse scenario, gold is always in other words, what did Greenspan quote said, in extremis, you can always use gold. So in that thing, gold has been a currency for thousands of years. We talked about the storm before the storm, long before the storm before the storm, gold had value. And so I think China owns gold for the same reason I own gold, and the same reason Simon owned gold, and same reason a lot of my other friends in the gold world own gold, because it is the antidote to fiat gone wrong. So, but that's part of it. Now, it's also that they probably are trying to come up with some strategic way to strike back at the U.S. and get out from underneath of dollar hegemony. Now, and I think it will help them do that, but it's not a silver bullet that will allow them to escape dollar hegemony without pain. So I think there's some, to your point, this is war and this is Game of Thrones, and everybody's trying to figure out how do we prepare for this battle, right? I do think from Nick's point of view, I don't agree with him. Well, so for long periods of time, he's absolutely right. Gold is an unproductive asset. But on those few moments in history that it's not, it's the most important asset. Does that make sense? So in other words, usually insurance is unproductive. I've paid my insurance premium on my car every year since I was 17 or 18, whenever I got my first car. Actually, I didn't get it till like when I was 20. So for the last 32 years, I've paid the insurance premium on my car. I have never once cashed in on that insurance premium because I have never wrecked my car. So that is the most unproductive asset that I have ever bought. But probably there will come a time where I will cash that in. And so while it has been unproductive, it doesn't mean it always will be unproductive. And in fact, it will be so productive at a specific time that I don't mind that it has been unproductive for so long, if that makes sense. So that is the way I think of gold. And so I get the point that Nick is making. And, I do think that I don't, what's funny is I don't know if you know this, John. There's people out there that think that I work for the CIA, which is so hilarious. It is so funny. So it's funny that you bring this up because I know they're going to be like, oh, anyway, it's so ridiculous. But anyway, so I think that I think that tweet and that response kind of encapsulates everything that's going on right now, because everybody wants the one ring, right? Everybody's trying to figure out how do we either get the one ring for ourselves or get out from underneath the power of the one ring. And I think gold is seen as one way to potentially do that. And that, it kind of goes back to what we talked way at the beginning of this conversation, was that the fact that one country has the ability to print their currency for the most needed things is what this is all about, right? One country has it, the other countries don't like it. One country has enforced their will on the rest of the world for a long time. Many of these other countries no longer want to go down that route. So everybody is trying to figure out, how do we get out from underneath it? And the US is trying to figure out, how do we maintain it? And that's why you see all these frictions in the middle. And that's what makes this such a fascinating time.
Well, look, I have a feeling that this is an episode we are going to have the opportunity to reference many, many times in the future, whether it be in the next couple weeks or out throughout the rest of the year. A lot of brilliance on your part. I really appreciate it and enjoyed the perspectives, some of the color you added, the narratives that were applied. It is a crazy time. There's a lot of uncertainty. You've said frequently, I'm not going back how far now doing this, but at least the last 6 to 12 months, that things are going to get crazy. One of the most important things that you can do is keep your head. And in a lot of cases, people haven't taken that advice so far, and it hasn't even really gotten that crazy yet. So great conversation, Brent. I appreciate it. Hopefully everyone else enjoyed it as well. You can follow Brent on Twitter at Santiago AU Fund. You can find me at John Kutsmeda. You can find the show at Milkshakes Pod, both on Twitter and on YouTube. Thanks again, Brent. Thanks to everybody. We'll see everyone again here real soon. This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.